Hi, everyone. I don't know what I just almost said. Good afternoon. Hold on. There we go. Now I'm ready. How is everybody today? Happy Thursday. I'm exhausted. I have a little bit of a headache, hence why you get my glasses. Fortunately, there's not a glare, so that's usually why I don't wear my glasses in here, because I have them to look at the screen, but usually when I give you guys lives, there's just a huge glare that it just looks terrible. But no glare today, so glasses it is. Where am I? Sorry, I gotta pull this up on both. You think I'd be better, like I'd have a system by now? Almost. Except for that just took me to the wrong place. As you guys get here, let me know you're here. Say hi. Tell me where you're watching from. Tell me if you've done anything exciting. I literally just jumped off the last day of a business. They called it a retreat, but it was a conference. It was 2.5 days of learning how to run your business better, how to target, your ideal clients, how to make sure you're serving your clients with what they need, all the things. So, okay. But yeah, exhausting, but it was funny because I know you guys know, like, there's two kinds of trainings or webinars or, whatever, trainings, we'll call them trainings, right? There's the ones where you turn it on and you kind of use it as background noise for whatever you're actually trying to get done and hope you pick up a few nuggets. And then, hi, Wendy. And then there's the ones where you want to focus and you want to take out everything you possibly can and eliminate distractions. So that's what I did with this one. So for this one, you guys, I came to the office. So I got away from my family and my kids. I actually sat either over there on the floor, depending on how I was feeling, but away from my computer. So I couldn't check my email. I couldn't check my Slack. And then I put my phone all the way across the room. Like you can see my hand, like it was over here. So I could focus on it and really deep dive into what I was learning. So it was really, really good. But hi, Kelly. I was talking to a couple, I think I was talking to my team, talking about how, for me, when I sit and I spend my whole day doing taxes and doing, actual client work, and I feel exhausted at the end of the day, I understand why, right? I understand that I just spent the whole day, really using my brain, problem solving, all those things. But there have been days where either I spend the whole day talking to people, or like I have the last couple of days, spent the whole day learning. And like after yesterday, I left after yesterday's training was 8 to 3-ish, a few breaks in there. But I went out there and I was like, Carrie, I'm exhausted and I didn't do anything. And I'm like, that's not true, right? I did do something. I was learning and using my brain just in a different way that I'm used to. So, oh, Wendy, I love that you say, oh, Wendy says I do that with every training of yours. You get all my attention. That melts my heart. Okay. Oh, that's so good. What a great way to start. On that note, let's go ahead and jump in. So, as always, I'm so excited you guys have decided to join me today and spend your afternoon with me. Not the whole afternoon, half hour-ish. For those of you who do not know me, I am Bree Beers of Bree Beers & Associates, formerly Lipa Beers & Associates. I am a CPA with a goal to enlighten taxpayers and business owners on all things accounting and tax. I understand that y'all don't know what you don't know when it comes to taxes and finance and accounting. So our team is dedicated to creating all the tools we possibly can to help shed some light on that unknown for you guys. So one of those tools is our awesome Facebook community. If you're not watching this video in that group, Money, Tax, and Finance for Small Business, and you are a business owner, go on over there. That group is made for you. It is a small, amazing, supportive community where we post daily tips, tricks, and then have weekly trainings and Q&A sessions. So Monday in that group at 9 a.m., I almost said 9 p.m., 9 a.m. Mountain Standard Time is our normal live training sessions. That's when we talk about the topics that you all are asking about most often. And then on Thursday, right now at 2 p.m. Mountain Standard Time, we go over updates from the week when there actually are some, and we open it up to live questions. So, and if you ever can't make a live training or you want to rewatch one that you watched in the past, all past lives for that group are in the video section, or you can watch pretty much everything on the YouTube channel. And that's where I recommend, because I think it's way easier to search for old videos or prior videos on YouTube than it is in the Facebook group. So what I'm saying is you should be in both places. Okay, so let's get down to today. So today is updates and Q&A day. Guess what? No new updates. In terms of PPP forgiveness and another stimulus payment or anything like that, we're still waiting on Congress. All right, still waiting. If you guys have any questions about this, definitely put it in the comments and I will address them. That's what we're here for. But this is kind of a great place for me to just interject and remind you guys of our 2 PPP service offers that we're providing to help y'all with all this. So we have our personalized PPP strategy sessions. This is for my DIYers who just need a little bit of guidance, maybe in filling out their forgiveness paperwork. Maybe you need some guidance on if you should apply for forgiveness now or wait. Maybe you're still trying to figure out how to spend your money. Whatever it is, if you have questions about your PPP or your EIDL that you want to specifically talk about your business and your loan, then scheduling one of these personalized PPP strategy sessions is the way to go. It's me, 30 minutes, one-on-one on a Zoom that will be recorded. You'll have access to it. It'll be awesome. If you are not a DIYer, and I know y'all are out there, I want nothing to do with this. I want someone to hand all my paperwork to do it for me. Then we are also providing full service PPP forgiveness application completion services. There's got to be a better name for that. I haven't worked on it, but to get in on that, you want to schedule a free consultation with me to discuss the pricing and the services for that. The links to both of those are in the description, either above or below me. I don't remember. All right, so I'm going to jump into questions. I don't see any in the chat yet, but this is your chance. Go ahead and start reeling them off while you guys are trying to figure out what you want to ask today. I have 2 really good questions that have come in to the group that I wanted to address. So the first one is, it says, I have a question about using an LLC to invest in the stock market. Would it create any tax benefit? Such a good question. The straightforward answer is no. Okay, creating an LLC to invest in the stock market doesn't in itself create any sort of tax benefit. Let's talk about why that is, and let's talk about the exception. We'll call it an exception to this no. So the main reason, you guys, to create an LLC versus just doing business or investing under your social security number is to separate that venture, whatever it is, from you personally, legally, okay? As always, hashtag not a lawyer, okay? Just an accountant. But creating an LLC to perform your business or to invest in other ventures, right? It creates a corporate veil that separates your interest in the business from you personally. So the biggest benefit, or the reason people do this, is because it prevents someone from going after your personal assets if they sue you or go after your business. All right, are you with me? So creating an LLC for anything, okay, whether it's for your business, for your Etsy, for your side hustle, for your investing, for your crypto investing, for your real estate company, any of those things, creating the LLC is strictly a legal umbrella, okay? It just kind of is separating you, pulling that investment away from you personally, from a legal point of view. All right, unless, I lost my train of thought. Okay, so an LLC can be set up anytime you start a business or as a vehicle for investing. Like I said, you can do it from the get-go. You can do it, later down the road. And this can be, when we talk about from an investing point of view, guys, We have clients all the time setting up LLCs so that they can invest in real estate, so they can invest in partnerships, so they can invest in corporations, and so they can invest. They don't really set it up to invest in the stock market, but you absolutely can. An LLC can invest in the stock market. No rules against that. But like I said, the LLC in itself, creating that does not give you any sort of tax benefit. Okay. Creating an LLC, no, not creating an LLC is taxed exactly the same as if you're performing those same activities under your social. Okay. Whether again, it's starting or running a business, running a real estate rental property, or investing in another business, investing in the stock market, it's all taxed the same. Unless you file an S Corp election or create an LLC with someone else and thus becomes a partnership, or you create a C corporation, okay? But again, we're talking as an LLC, setting that up is just a legal, I keep calling it umbrella, but it's just a legal separation of your business activity against your personal activity. All right, that all said, if you guys are talking about or asking about day trading, minute trading, if you've heard that, right? Where people are actually just sitting on, like their job is sitting there constantly trading, okay? We have clients who do this, okay? And that's a different story, all right? So this has nothing to do with setting up an LLC, but this has a difference to do with what your activity actually is. If you're just like, I want to invest $10,000 in the stock market, then creating an LLC is not going to create any tax benefit. But if you are what is called a professional trader, okay, let's talk real quick. I don't know how many of you are in this group that would even be considered this, but I just want to let you guys kind of know that this exists and it's out there. Because, I don't want you to come back and be like, well, I have friends who say that their LLC gets a tax benefit. It's not the LLC that's getting the tax benefit, it's the business activity that they're doing, all right? So we're called professional traders, okay? So with a professional trader, you get to take your gains and losses from the stock market or your stock market investments, your crypto investments, if you're a crypto investor, and you get to take them as losses on your Schedule C, okay? You gotta take your gains too, all right? But it all goes as a Schedule C, as a business, all right? So when you're just investing, you're passively investing, right? You are limited on your losses, okay? Passive investment activities have limitations that the IRS sets. A Schedule C business doesn't, okay? You can take Schedule C business losses against any other income you have to essentially there's no threshold on that. So that's where the tax benefit of being a day trader versus a casual investor would come into play. Because when you're in a passive investor, if you have losses, you're limited to taking $3,000 every year, okay? As a professional trader, those capital gains and losses are not buried, but they're included in your income, in your ordinary business Schedule C income. So those losses can be considered ordinary losses. All right, but there are very stringent guidelines to be considered a professional trader. I'm just going to go over them high level because, again, I don't know how many of you in here this actually pertains to, but I had the question, so I wanted to answer it. So you guys are talking, a professional trader, someone who has at least 720 trades per year with 200, typically 1,000 actual significant sells. Okay, traders spend a good part of almost every day watching and trading the markets during trading hours. Okay, we're talking 5 hours a day, 4 hours a week minimum. All right, to be considered a professional trader, this activity really does need to be your primary way to provide for your livelihood, okay? If you have a regular job and then you're doing this, it's gonna look sketch to the IRS. All right, and the taxpayer, as a professional trader, you still got to maintain a business-like operation, good books, good records, continuing education, seminars, all this, and so on. All right. So again, not very many people are going to be considered this professional trader and get to take the tax benefit of being a professional trader. But I wanted to show you, or explain to you guys that it does exist because I was asked this question, like, does an LLC provide benefit for investing in the stock market. No tax benefit, legal benefit. So Wendy says 2 questions, pros and cons. I have an LLC sole owner who created a C Corp. Should I encourage them to go S Corp? I have a question. I am positive no clear answer can be applied. I have a client so 2 questions. You said that. Pros and cons. I have an LLC sole owner who created a C Corp. Should I encourage them to go S Corp? We have a whole nother training on that. I can't remember where it is. Not specifically going C Corp to S Corp, but all the benefits of an S Corp, because I could talk about that for an hour. But making that S Corp election, you guys, anytime you've heard me talk about it, I've told you it varies person to person. It's not everybody should be an S Corp or every person in a certain industry should be an S Corp. No, it depends on your income. It depends on like your business overall income. It depends on your goals. It depends on how much money you need or want to take out of the business. It can depend on how much you want to put into retirement. There's all these different pieces that go into that. So can't really answer it in one like overall, Wendy. For me, the only reason I would ever suggest a C Corp, and I have in the past, is if they want to go public. All right, and then they want to if they want to do employee stock options, if they want to somehow have more than just their original set of owners, right? Then those activities are way easier to do with a C Corp. All right, an S Corp, you do not want a lot of fluctuation. If it's always going to be one person or the same number of people, we're good. Okay. Okay, so there. Okay, let me next question. I'm positive no clear answer going to be applied. I have a client who owes over $3,000 for the state, but getting a federal refund of $2,000. How does one go so up and so upside down? I'm guessing it's from what they paid in. I'm guessing if you look at their actual tax. So when you guys look at your tax returns, my favorite page to go to is your comparison, because it's like a summary. You don't have to flip through the whole thing. And in that summary, or in that 2-year comparison or year-over-year comparison, called different things in different softwares, there's an income section, there's an adjustments section, there's a deductions section, and then when all is said and done, it'll tell you your tax, right? So your total tax for the year. Then below that, it'll say how many, any payments applied, any credits, your withholding, all the payments you've made throughout the year, and then you have your balance. All right. So your balance due is not your tax for the year. Okay. Unless you paid $0 in throughout the year through withholding, estimated tax payments, you've had you get no credits. Your total tax does not equal your balance when you file your tax return. All right. So I want you guys to look at your total tax. And then if you look at and then at the very bottom of any of your 2-year comparisons, it'll tell you not your marginal, well, it does tell you your marginal, but your effective tax rate. Okay. And so your effective tax rate on federal is usually somewhere between 10 and 30%, depending on your income and your deductions and all that. And state taxes, like in Colorado, state tax is 4.65%. Okay. But if you look at circling back around to your question, how do you get it so upside down? My guess is their total tax is in alignment. Okay. Their total state tax is in alignment with whatever their state tax percentage is. Their federal is in alignment, but what they've paid in before you file your tax return or before that tax return is filed is upside down. And I did that. I filed my tax return and I did great on federal. I was getting like $250 back, which is, I want to try to break even, but I forgot about Colorado, and I owed money on Colorado because I didn't pay into Colorado the way I paid into federal at the end of the year. Cool. Okay. No more questions in the comments. So if you have them, go ahead and ask them. If you guys have if you have questions, let me know. But otherwise, I will go back to I have 2 predetermined questions. So this one says, this is a good one. So this is about EIDL funds. So if I pay myself from my EIDL funds, does this go on my P&L as taxable income? So I want to start out with the Jamie Troll rule. guideline, you should not be paying yourself with borrowed money if you can avoid it. Okay, so PPP is different because it can get forgiven, but your EIDL is a loan. It is borrowed money that you will be paying interest on. And so if you can avoid paying yourself with loaned money, with money that you have to pay interest on, try to. That said, I get that some of y'all do, you have to, right? You're out of the $600 PUA, it's gone. Some of your guys' businesses have not recovered. So that EIDL is not necessarily meant to keep your business running. It's meant to keep your household and livelihood running, right? To pay yourself. So to touch on this, you do need to be careful with how much you pay yourself from EIDL funds. I know this was not the question, but again, gotta give you a few little pointers first. So what I suggest, if you absolutely have to use EIDL funds to pay yourself as a business owner, look at your Schedule C, your 2019 Schedule C, line 31. Use that as a guide. Okay, that number on your 2019 Schedule C, line 31, should be considered your annual salary. And then you're going to use that number to pay yourself. So if you're paying yourself monthly, you're going to take 1/12 of that number. If you're paying yourself weekly, you're going to pay 1/52 of that number. All right, so that you are taking a reasonable salary from your EIDL. Because if you ever get looked at or audited, or they dig into that, and you're taking 5, 6, 7 times what you actually were able to take last year, you're going to have some red flags. Because the rule is, you guys, the EIDL funds cannot be used to pay distributions to the owner unless it's for services rendered within it. Okay, so as a Schedule C business owner, right, any profits you end up with, all of your revenue, less all of your expenses, whatever cash is left, that's yours to take as you need, right? So that's your profit, and that's yours to take out of the business and use for personal use as you need. So that is a good guideline for your 2019 Schedule C, line 31 is a good guideline for how much that salary is, okay? That said, if you're an S-Corp officer, then you need to use your 2019 W-2 wages as a guide for what to pay yourself using those EIDL funds if you need to, okay? So now let's talk about the accounting of the EIDL loan, because the original question is, if you pay yourself with the EIDL funds, does it go on your P&L as taxable income? So let's start from the very first time you received the money, okay? And this is any time you get a loan, okay? It can be the EIDL, it's the PPP until it's forgiven. If it's a business loan, a line of credit, a credit card, any of those things, okay? When you get borrowed money, okay? It goes on, so cash in, that's a debit. So accounting 101, every time you enter something, there has to be a debit and a credit that are equal, okay? We're going real micro here, okay? Debit, credit. So it has to hit your balance sheet, or it has to hit your accounting in 2 places. Okay, so when you get cash in, you're debiting cash, which is an asset. So where does the credit go? Okay, it's not income because it's a loan. You credit a liability account. Okay, it's on the balance sheet. If you're Schedule C, a lot of y'all don't keep balance sheets. So that's where you're like, that's why I know you guys want to make it income. It's not income. Got to have a balance sheet. Okay, for the same way you track your cash that's in the bank, okay, that's an asset on your balance sheet. Okay, your loans, money owed to other people, are liabilities on your balance sheet. Okay, so again, I know Schedule Cs don't have to keep a balance sheet. Doesn't hurt to keep one. All right, so that's when you get the money. Okay, and as you spend the money, okay, your money goes out, so that's a credit to cash, to that checking account, right? Money in is a debit, cash out is a credit to your checking account. So where does the debit go, right? Because there always has to be a credit and debit. You're debiting your P&L, your expense, okay? Just as if it was earned cash, okay? It does not matter. The accounting for this does not change whether it's borrowed money, earned money. It doesn't matter at that point. Okay, it comes from your cash and it goes on your P&L. If you're a Schedule C business owner, so that's for normal expenses, right? But we already talked about this, when you're a Schedule C business owner, okay, paying yourself, that's not a P&L expense. Okay, you don't get to deduct that. Okay, therefore, where does it go at that point, right? It's a balance sheet item again. So when the cash goes out, so when you write a check to yourself from the business, when you transfer money from the business to your personal account as a Schedule C business owner, it's called an owner's draw or an owner's distribution. It's an equity account, but that's what you're debiting. Okay, credit the cash out, debit the owner's equity. And at the end of the year, if you look at that owner's draw account, that's how much money you've taken out of the business. Okay, so again, I know a lot of you don't keep balance sheets because you don't have to, but when you have loans, it's imperative because it's the only way you can track that you're tracking the loans correctly. Okay. And then as for the EIDL loan, right, that we created when we got the money, that EIDL loan liability, it remains untouched until you start to pay off the loan, with the exception of recording any accrued interest. But for the sake of you as an owner, you're not going to touch that again. You're not going to touch that liability account until you start making payments. Then when you start making payments, you're crediting cash because the cash goes out, right? So you need the debit. So you're going to debit that loan balance and then any interest that you're paying. All right. I know that's a lot more than you asked, but it comes back to answer the question. Okay. If you pay yourself with EIDL funds, does it go on your P&L as taxable income? No. Okay. Paying yourself with EIDL funds does not create any sort of effect on your P&L. No income, no debit, or no expense, nothing over there. It's an equity, I was going to say adjustment. It's an equity entry. It goes to owner's contribution. It does nothing for your P&L. All right. So let's see. Let's check the questions. Thank you, Anita. Anita says, listen to Bree. Last year I did a tax strategy with her team, and y'all, it was so worth it. That is such a good segue into our ending announcements because we have 3 minutes left. I'm done answering questions. So, love you, Anita. Thank you. I got to go on Facebook and like your comments. So you guys, if you don't know, there's one more 2019 deadline, individual tax returns, including those of you that have a Schedule C business. If you have not filed your return already, y'all, October 15th is the deadline, right? October 15th. Okay, that's like 3 weeks away. If you owe money, you need to get your return filed by then, because if you don't, the late file or the failure to file penalties are 5% of what you owe for every fraction of a month that you don't file. Right? So if you're a day late and you owe $1,000, you are going to end up paying $50 in penalties, failure to file penalties for 1 day late. All right. Even if you can't pay your balance, you guys, file your return, because the failure to pay penalties are 0.5%. Okay. 1/2. So that would be $5. If you owe $1,000 and you don't file and you're a day late, you're going to be charged $50 failure to file penalty. If you have $1,000 owed, you file, but you're not able to pay, you're going to pay $5 penalty for the same time frame. Okay. So file your returns. Okay. We are past our deadline to get your documents into our team to ensure timely filing. And if you don't owe money, you guys, then I still suggest you get your return done, but you're not going to owe penalties. Penalties for individual returns are based on the amount you owe. And then to remind you guys, there are plenty of opportunities still to work with us, right? 2020 tax planning. I've been saying this for all years, right around the corner. It really is now. It's going to begin in November. So if tax planning is something that interests you, which if you have a PPP loan, if you have a business that fluctuated this year, anything like that, you want to do some tax planning. Okay, you need to do some tax planning. So definitely make sure you're on our email list, because the details for our tax planning packages and scheduling will appear next month in October. Not even the same vowel. They both start with a vowel. October. And then you guys, some new exciting news. So we are actually going to have new packages and services come into you guys in 2021. That's all I'm going to give you. Okay, a little teaser. We've gotten feedback from our clients. knowing what our clientele wants, knowing how our clientele has shifted from what it was 3 years ago to what it is now. There need to be more offerings for y'all, and so they're coming. So that's all I'm going to say there. So to end it, when he says there are cheat sheet available on all IRS fees, I don't know. That's a great question. I'm sure there is. I don't have one. I just Google it when I can't remember. Terrible answer. But on that terrible answer, I'll let you guys go. I will see you guys Monday at 9 a.m. Mountain Standard Time. That's our normal weekly training, and it'll be part 2 of our retirement series. And we're talking all about 401ks and solo 401ks. So come on over and join me. Otherwise, I want you guys to have a fantastic weekend and see you on Monday.